What's up, Swing Trader Snacks here. We're going to go through and do our watch list for September 26, 2025. And today's might run just a little bit longer than normal because I have a couple points that I would like to make sort of around the idea of trader psychology. And opportunity really is more what it's going to be about. But I have something I want to cover, so hang with me, and I think there will certainly be some value for you here, given our current situation, right? We're pulling back in a major bull market, and there's just a lot of bear porn out there. So much bear talk, just some panic, frankly. The crypto market is really got people riled up. Okay, we're gonna look at these things today in the watch list, and I do have a list of RRR triggers that seem to be setting up that we will cover as well. But I wanna jump into something. So something that I do apply personally to my risk management mainly, but my trading would be game theory, okay? It's an older idea, but I think it's still applicable to this day. It was from a book written in, I believe, the late 40s, right around the end of World War II. There was this economist or mathematician, it was John von Neumann, and he wrote this textbook really that studied zero-sum games and your best strategy forward. So zero-sum games would suggest that there's a winner and a loser, and what would be your best strategy when facing a sophisticated opponent in a zero-sum game where there will be a winner and a loser. But what the author suggested, and furthermore game theorists still to this day, it's a very still highly applied subject, I would suggest, in macroeconomics and competition, all kinds of things. But what they figured out was that in zero-sum games, your best strategy to pursue against, again, a sophisticated opponent, in our example, the market, is to adopt the strategy which minimizes your maximum loss. It's sometimes referred to as the mini-max strategy. So the idea would be to think, what is the worst scenario that could happen to me? What could my opponent do that would make me worse off? And then you figure out what is the best strategy against that. And in most cases, it is to minimize your maximum loss. And game theorists proved that by using this thinking or this strategy, you ensure that no matter how sophisticated your opponent is, you've guarded against the worst case scenario. And that in zero-sum games, by doing this, by guarding against the worst case scenario, you've done the best that you can do. So how does this apply to trading? For me, it's by knowing that I have an edge with statistical significance, okay? The RRR setup, for one example, all 6 of my models have statistical significance. They all hit at well over 50% at a minimum of a 2R, okay? Statistical significance. If I do this repeatedly over time, I come out ahead. So you have an edge, okay, and you've identified a reasonable scenario where this edge will have that statistical significance, market breadth, right? You've aligned it with proper timing. This would mean that the odds are currently in your favor. Furthermore, you've identified your max risk and protected your downside. Step up and swing the bat. This is how you win a zero-sum game. You stack your probabilities the best that you can, you don't deviate, and you swing the bat. And I would suggest that the market is not exactly a zero-sum game. Okay, sure, trade by trade, winner, loser, but when you apply it to a larger sample set of data, 1,000 trades, 100 trades, 10 trades, is there an edge there? Is that a zero-sum game? You could have less winners than losers. If you have a high R, you can still win. So that's not exactly a zero-sum game, but let's take poker for an example. Every hand has a winner and losers, but the longer game can have multiple people walk away with more money than they came with, right? So I wouldn't suggest that's exactly a zero-sum game. Maybe hand by hand, but the game is not. And just like the market, there's mathematical variance to the strength of any given hand versus the table. And this is dynamic, it changes from the flop to the turn to the river. And how do you win in poker? You press when your hand is significant and you survive when it is not. It's that simple. And you wouldn't sit at the poker table and hesitate when you're dealt a winning hand. You would leverage it. You would apply the edge to extract as much money, capital, from the table as you can in that moment. Of course, again, while still calculating your risk as you head towards the river. But if you aren't willing to play, then why are you at the table? And if you aren't willing to be wrong, you won't be there long. So back to the market, you are here to leverage probabilities when they are in your favor. This is it. Do I have an edge? Does it have statistical significance? Is the market currently aligning with my edge? Have I capped my risk? And if so, swing the bat. Live with the results and do it again the next time all of these things align. This is all that we can do, okay? We can align our edge with probabilities and swing the bat, guys. So I'm not gonna rant anymore on this. I do have some other things on the topic, but I just felt it necessary to address this, guys, because there's, again, a lot of bear talk and, you know, just noise out there right now, okay? Guys, look, we're pulling back on the market, okay? A few day pullback. If you've been following me for more than 15 minutes, I've been saying we're looking for this for 3 weeks, okay? We knew this was coming. We wanted it to come because it's resetting our entire focus list of leaders, okay? Our R setup is retracement, pullback, retracement, reaction, show of strength. They step in, they position, they buy it at a discount and push it back onto trend. So retracement, reaction, step in, and remount, okay? It's where we were looking for this, all right? So I know that none of you guys in bootcamp or anything are too surprised by this or are all worked up by it, but I just want to address this because there's some people watching these that maybe are, okay? You know, it's a very small, modest start to this channel, but I've got some people watching and I just want to address that, all right? Listen, pullbacks are healthy, all right? We've been in a ripper for 6 months, guys. We needed a pullback, okay? So just be sure you're not over positioning at any given time and learn to wait and look for these, identify them before they come. If you're wondering, go look at my market breadth videos for the last 3 months or any of the watch lists leading up to this over the last 3 weeks. We've been looking for this and market breadth was telling us this was coming, okay? And now it's here and we're looking to position and apply our edge, okay? So I'm very excited about this pullback, and as we will see when we jump into the charts and the watch list here, we got a decent sign. We had buyers step in yesterday, and you know, if we can hold this level and get back onto trend, then we're gonna swing the bat, okay? We are not fearful. We're ready to apply the edge. All right, so there's that. There's still 2 other things I want to talk about here. One would be the AI bubble. It's a big source of a lot of the bear talk right now, and I just gotta say, chill, stop. It's not a bubble yet, okay? It's just not. I don't even have a robot girlfriend, okay? We are just beginning, okay? Is there gonna be volatility? Yeah, okay? But to suggest that this is a bubble that just popped I find it ridiculous, frankly. It's almost insulting, okay? The biggest companies in the world are throwing billions, hundreds of billions of dollars at this technology, okay? Just chasing and grabbing for any piece of it that they can because they understand the significance of what is happening. This is a revelation, a revolution, a technological revolution, okay? And we're witnessing it and we're a part of it, and we're in year freaking 2. We're in year 1 or inside of that of the infrastructure build out, okay? To call it a bubble right now is silly. I'll keep it on that word. It's simply not. Again, it's a technological revolution that has just begun and it's not going anywhere. Is there heightened speculation? Are there some obscene valuations out there? Yeah, okay. But this happens every time that there's a foundational shift in commerce or industry or technology, right? People are excited, people are positioning, people are speculating. So yes, you need to be selective and you need to control yourself and manage your risk properly. But to call it a bubble and throw in the towel before we all have robot side chicks is just crazy. Okay, this is just getting started, right? We're gonna have robots walking our dogs. We're gonna have robots doing our dishes. Like, this isn't even a thing yet, and you're calling top? Like, give me a break. Give me a break. And my point here is did the dot-com bubble pop? Sure, it did. But were there companies that were an integral part of that new technology that are still here to this day that even minimal investment to at that time became significant, substantial wealth over the last 25 years? Yes. So guys, this is what AI is for us right now. You gotta wrap your head around that because it's happening. This is our .com opportunity. It's generational. And yeah, I'm trading it, but I'm also DCAing in. I'm looking for my Amazon, Microsoft at $4 a share, okay? And frankly, if we do get a significant correction that everyone's gonna call a bubble pop or a top, again, I'm going to DCA in heavily with long-term mindset, right? I have a separate account where I do that, and this is one of those opportunities where you need to be thinking long-term and grabbing a few of these companies. Do your research, understand what you're buying, the potential of it, scalability, all these kinds of things. But there are times to be fearful, right? And there's times to be aggressive. And again, this is generational. This is crypto in 2014. Again, will it be volatile? Yes. Should I identify the leaders in DCAN? Probably. Okay, and the last thing I want to talk about before we hop into the watch list is a position I did initiate yesterday. Another long-term mindset, multi-year, maybe even decade think here. So BMNR, right? Tom Lee's Ethereum treasury company. And I would argue this is sort of a new derivative, right? A new trading vehicle, a new investment vehicle, these treasury companies. And I just want to say that in my view, they don't calculate with traditional value investing or PE ratios. It's just not how it works, okay? You need to look at these things a little bit differently than a company with a product, because that's not what they are. They're purchasing an asset, right? In this case, Ethereum. And BitMine has over $9 billion on the books. They hold and own $9 billion of Ethereum. Their market cap is currently $14 billion. So for me, the trade is very simple. Do I think there's a probability that Ethereum goes higher in the next 2 to 10 years? Yes. Adoption rate is massive. You could argue we're in the early phases, right? And take Bitcoin, right? Just over $2 billion market cap. There has never been an asset class or an asset that has hit $2 billion and then gone to zero. Like, this is happening. It's happening, guys. Get over it, right? Bitcoin, Ethereum, the top ones, they're not going anywhere. If Bitcoin is gold, Ethereum is the internet. It's the network where things are going to be built on. Adaptation, adoption, real world use is going to be built on Ethereum. It's the internet. Okay, so it's one of those things where, again, sort of like the AI, I encourage you to look at where we are right now in the financial markets, the world. There are a couple opportunities here that could be foundational in your wealth generation over the next decade, 2 decades, right? We are staring at 2 separate opportunities. So look, guys, my point is here that, I'm initiating longer term positions. Usually we just do the watch list where I trade options on 3 days to 3 months, but I've begun initiating a couple longer term positions, and look, I'm hitting AI and I'm hitting crypto, okay? These are 2 things that I think we're still very early on, and it's an opportunity at significant returns. It's about the best I see out there, where it's just not too highly speculative, okay? Like, yeah, it's speculative. Yeah, more so it's gonna be volatile, but like, Ethereum's happening or crypto's not, okay? And I think we can agree that it's happening, okay? So I'm not even sure how speculative Ethereum exposure is at this point, right? I'm looking more long-term. What is the growth trajectory? Where can we go, okay? And is it worth, or what capital do I need to put in this for it to be significant, right? For it to matter to me. So this is what I'm doing. I'm DCAing into a couple AI stocks. I might even do a robotics in this longer term, right? I'm going to be trading robotics, I believe, over the next few years. But I'm looking at some long-term trades. I like BMNR. I've got some other stuff that we've already talked about, but I like BMNR, okay, here, where it currently is. We've also got structure. You guys know that I do still like to align this stuff with structure. Look at the chart. I think you'll see pretty quickly why I like BMNR where it currently is, especially if it holds, but I'm DCAing in, so if it does break down, I'll probably hold on to it and look for where positioning and strength comes in, right? Where do we find a bottom? But anyways, guys, look, I'm positioning into AI, I'm positioning into Ethereum, Bitcoin, Link are the kind of the 3 cryptos that I am positioning into for long-term holds. And I just wanted to address that and say I do think we're staring at our generation's wealth building opportunity. So I know that was a lot, and pretty deviated from what we typically do here on the watch list videos, and I do have a watch list. I'll try to make this one a little bit quicker. So we'll start with a bit of market breadth here. Guys, we got SPY. Let's look at just the daily. We got bought up, okay? We gapped down and we held up. But look, guys, we've been calling for this. We wanted a pullback, we're getting it. Could it retrace even further? I'm still sort of looking for the 50 or this gray area, but being that we sort of gapped down, sold off, and reversed on the day intraday yesterday, then getting back over the 9, getting back onto trend would be a very similar look to every other time we've broken the 9 and not been able to get down and test that 50. So guys, if we get back onto trend here, here's my list of triple R's that I am looking at. We've got Rhythm. All right, so again, Triple R is a strong company in a trend backed by growing fundamentals, respecting structure, and we look for a retracement, reaction at or around our level and a remount of the short term. So Rhythm is sort of going back and forth on our short-term moving average, the 9, but I think clearing of this range is, you gotta swing that bat, okay? And then we've got CLS here. Looked like it wanted to roll, but got bought up. These are the things that we are looking for, guys. We're looking for positioning. We want to see a leader go on sale and watch closely, see, do they step in and buy it up and get it back on the trend? Guys, through yesterday's high on CLS would be exactly that. And then you've got this flat top breakout that, you know, you're looking to bust through and get a quick 2-to-1 out of this. I don't think you need to hold this too long. It's either gonna make the move or it's not. And we've got Dash here, a frequent trader for us, and guys, we're getting a bust through that prior all-time high, a pullback hold of it, back on the trend, and I think through yesterday's high is worth considering looking for all-time highs. And we've got Netflix, one we've been looking at, and we're looking for this guy to clear range, targeting recent and all-time highs above. ANET and NET are both very attractive, but we've got a strong company in a trend, and we get a retracement reaction at around our level. Remount of the 9 on ANET is attractive to me, and then NET is similar, right? Another recent trader. So look, we're battling or testing that all-time high breakout level, and we pulled back below it again, but we've held structure yet again. We've got a reaction at around our level. I think a remount of the 9 and getting back over that prior all-time high, which is where what this green line is here. You got to swing that bat, okay? And we're targeting all-time high, and that would be a massive recovery breakout on the weekly chart here. It's worth a shot, guys. It's worth a shot. AMD, let's go back to the 1 day. AMD back over the 50 we've been saying here for a few days, has a good look to it. And Celsius, another one that we got our retracement reaction at around our level. Guys, over the moving averages here, you got to swing that bat. VST, another one that was, you know, kind of getting through all-time highs, and it's pulling back, so it's being a little bit shaky, but I think maybe next time over the 9, this might get some legs, aligning it with the market, right? We need strength out of the market. I want to look real quick because this is pretty similar. We didn't do RSP, the equally weighted here. So pretty much the RSP is what you're looking at, VST and some other of the leaders. It's a very similar look. Guys, if we can get right back onto trend, I think we clear highs and we push, okay? Because, you know, look at our reaction off of the 50. If they can't break it down here, guys, we're in chase mode. We just simply are. Look at this V-shaped recovery, the most hated rally, all these things. You've got trillions of dollars in assets on the sidelines that need to be deployed into Q4. These fund managers have to get these leaders onto their books before end of year, or who the hell's gonna give them money if they're not holding the leaders? So anyways, guys, I don't know what's going to happen today or next week, okay? We might pull back, but if we get back onto trend now, today, then we have to swing the bat on our continuation models, okay? It's what we do. And jumping back in, we've got Roblox. I think this has got a similar look to it. Yeah, so it's trying this all-time high area, guys. Reaction at around our level, back over the 9. Roblox is attractive, and we also have an IPO cycle, cup and handle, bunch of stuff happening here. This is attractive, okay? And I do actually like this longer term because of that IPO cycle. Come check out Bootcamp if you want to know more about that. We just covered it, and I gave a couple dozen examples of how well and often this plays out in the leaders, but the idea is that it will repeat this IPO cycle to the upside. Take this box, duplicate it, put it right here, and within the time range, the price range will very likely repeat to the upside in the leaders. And I challenge you to backtest that on the leaders and see how often these IPO cycles play out to the upside and the price range of the IPO cycle repeats to the upside. BMNR, this is, you know, I said that B bit minor. Yeah, we entered this yesterday, but let's go to the daily. This is the structure that I entered off of, but I am willing to DCA into this. But look, we're getting a retracement reaction at around our level, and I got in a little bit before the 9, but this isn't a triple R trigger for me. This is something I am DCA, dollar cost averaging into for a long-term position. We're getting a reaction off the 50. I took a starter. It's pretty simple. If we break down, I'm going to look for strength. When I see it, I'll probably take more. If we go up, then, you know, I'll probably wait for pullbacks to add as we go up to get up to full size on this longer term position. Carvana is the next one for triple R. Again, another one that's flirting with this all-time high range, still holding structure, getting a pullback. Got a gap down that got bought up. So guys, this is just so attractive. Okay, look, we got a reaction at around our level, getting back onto trend towards all-time highs. You got to swing this bat. Okay, if we're strong in the market, if we have the wind of the markets behind us, the 3 out of 4 stocks follow the market, right? If we're strong again, if we get back onto trend in the SPY, and if we break out in RSP, IWM, things like this, if we have market breadth in our favor, you got to swing at these setups. Okay, I will be at at least half size, maybe a position or two. If it triggers today, I have my model, my data tells me I must take this trade. I must see this hand out. Amazon is one that I am looking to get into. We've covered this a lot, so I'll just do quickly, guys. Over the 50, I like Amazon for a move towards all-time highs. And AVGO, another one, we're getting a retracement. It breached the gap yesterday, but got bought up. Guys, back over the 9. This is very strong, okay? If they cannot invalidate this gap, if they cannot fill this gap, and it gets back right on the trend, it's very strong and suggests that we will retest recent highs. And Reddit, another one, same deal. You can kind of see that, I'm really looking at our leaders among our list of leaders here. And guys, if you want the list of leaders, it's in the description below. It's about 50 of the strongest stocks in the market, respecting structure, RS leaders in a trend, just over and over and over again, providing these triple R setups. Here was one here that worked, and we're looking for another one. Guys, it's a retracement, reaction at around our level, remount of the level, stop goes below, swing low. It gets dynamic as you get over 1R, and then you're looking for 2R. Okay, again, come to Bootcamp where I explain this and lean over your shoulder for 60 days and go one-on-one with you and give you an edge you can leverage for the rest of your life, and also teach you proper risk management so that you're not one of these people that is complaining about this little baby pullback when we've been on a 6-month ripper. We knew this was coming. It's an opportunity. Guys, I won't rant anymore. Let's go to ALAB and another one here. Oh, wow. Okay, so I put this little range in here yesterday. I said we wanted to see a reaction off of it, and we did. So I want it back over the 9. That would be a breach of the gap down high, and the 9 will probably be aligning with it by the time it gets there. This is attractive. I like it. If it triggers, I will be considering it. Dave is another one. This guy can get very squeezy. It's still holding structure, right? We're getting a reaction at around our level. I think back over the 9, you got to take this, and this is another one that is in the middle of an IPO cycle. Guys, a lot of times, we talked about what they do when they break out of the IPO cycle, but on its way to it, we get a lot of triple R setups while in trend heading up towards IPO highs, and that's what we've got here in Dave. AMSC, I think this is something, Intel's getting a lot of the attention for American semiconductors, but AMSC is in this world. I mean, they're literally called American semiconductors. But anyways, US made semiconductors, stuff like that. Like, it's just, I think the government is going to continue to subsidize that space. And so look, this is a leader with a story behind it, and we get a retracement, reaction at or around our level, remount of the 9 here. I think you got to take a swing at American semiconductor. CRDO, one of the hottest stocks in the market, one that we have played a few times recently. Man, I should have held this one longer. I bought it right here. I took that off because of the example we were doing in boot camp. But I did buy that. Really what happened is I bought it without noticing. When I got into this trade, I bought it without noticing. I don't know how I did, but without noticing that earnings was in just a couple of days, so I got out immediately. I had contracts, so I actually still made like 10% in 20 minutes. It was kind of cool. But it was frustrating as well that I just it wasn't my trade plan, so when I noticed it, I just got out, right? And reassessed, and then a couple days later it would have hit where my target was, but anyways, look, it wasn't the trade plan, so I got out, right? I manage my risk. I control my risk, not the markets. Couple more here, guys. I know this is a long one, but OUST is another sort of story like AMSC, right? It's a semi stock getting a retracement reaction at around our level. We're going to look for this to remount the 9 and possibly target a break of this flat top here above. And again, another one. 1 week, another one that is in the middle of an IPO cycle and likely to trend on its way up to that. Look at all this accumulation. This is going to be a trader very likely for us for a while. And then we've got Shop. Not my favorite, so I'll be quick on this one, but guys, if we get a reaction off of this 50 and start to push back up, it's worth looking at. And SYM is the last one here. I'm looking to get into robotics, okay? Longer term idea, but I think it'll be a trader as well alongside it. But we're getting a sort of a stuff at the high levels and a pullback to our 50, and we're getting a reaction at it. And I think a remount of the 9 here is worth a shot with the stop just below that swing low. You gotta swing that bat. Probabilities are in your favor, and you just keep doing that and expand your data set, okay? And you will be in a position where you have found yourself an edge that outperforms the market. So guys, let's just take it day by day. If we get some strength and we get back on the trend here on the market, I will likely put on at least a half size position. Okay, I'll keep talking to you guys through that. Boot camp, we've got our next on Monday. We've got a lot to talk about. So look, I know this was a long one. I appreciate you hanging. Please do subscribe if this is not your first time to the channel. You're coming back, you're hanging out, subscribe. I appreciate it. It's been fun to get this channel going. Very new to me to open up like this, but I feel that I have something, obviously do have something of value to share, and it's been fun to do so. So guys, stay safe, manage your risk. Let's go make some money. I'll see you next time.